Crude oil daily forecast December 6th, FXEmpire.com. The light sweet crude markets fell during the session on Wednesday after triggering the sell signal that we had talked about on Tuesday. After all, the shooting star break of the bottom was a sell signal for us, and if you took the same trade we did, then you're in profit at the moment. However, below we do see quite a bit of noise, and this noise could get in the way at several different points. We think that 86 is going to be tough to crack, as well as 84. Overall, though, we don't like oil right now and believe that even though there are signs of possible economic growth, the demand is just simply far too weak in various parts around the world. Because of this, we are very bearish of the market and do continue to want to sell rallies. A break of below the 84 level, which seems very unlikely at this point, but if we get it, would be an extremely bearish sign. We see far too much noise all the way up to 94 to get involved to the upside, so we simply look for rallies to sell or a breakdown. We think that 86 will be targeted. We just don't know if it'll get broken. So as long as you are comfortable holding in this position, this is something that you can do. But more or less, this is going to be a choppy, consolidative area, in our opinion, between probably 90 and 84 going into the end of the year. Traders will be booking profits, and some of them got into this market this time last year, so they are still very profitable, and as such, will have to collect their profits for the year. This is especially true in the United States, where capital gains taxes are set to go higher. During this session, the Brent market did pretty much the identical thing as you will see most of the time in these markets. We had the shooting star from the Tuesday session, and then of course we broke the bottom of it, which was a sell signal. Now we're sitting, hovering just above the 108 level, and think that it should be pretty strong support. However, if you are comfortable holding on to the trade, you can certainly wait to see if 108 gets broken. If it does, we could go much lower. 106 certainly would be targeted. Above, we don't see anything suggesting a buy rating on this until we break at least above the 112, and even there, we think that that's probably somewhat unlikely, barring some kind of news or noise out of the Middle East. After all, Brent is greatly affected by the Middle East, much more than the light sweet crude, which typically comes out of places like Canada. All this being said, though, we think the demand is going to continue to be weak, and this is especially true with our friends in Europe. Europe uses a lot more Brent than light sweet crude, so this market will often be affected by Asia and Europe more. And Europe looks weak still, so we think the demand just simply will not be there. And most of the rise has been basically predicated upon headlines out of the Middle East.